All right, I'm using the S&P 500 index on it's going to be the daily and the hourly time frame. This will be helpful as a general thesis over the market because it's the 500 best companies. So this is what the market has done over the last few days. We have a parallel channel that I just built from these highs, spreading from this low. There is a point of control here at this point, which happens to be above the golden pocket. So we're in what would be called a free fall. I expected the price to hold here, and it has. Another reason why it's holding there is there's a very attractive BPR that goes right across. See how these wicks, they don't fill? If we take this area to that area, that's the area that it's likely going to hold, and that's where it held. So anytime we see a BPR, we can set that as a marker. See a pretty attractive BPR here. And that happens to coincide with the bottom of the channel here. What do I expect based upon what I would assume to be a 5-wave correction? 1 wave, 2 wave, 3 wave, maybe 4 wave back up into this BPR. Could be a 4 wave back up to here as long as it doesn't wipe out wave 1. Could go right up to it. See, there's a gorgeous BPR here. How would I trade this? Now that the cat's out of the bag, everyone's scared. Now is when all the sheep, if you will jump in for shorts, and then the price will go back up here and they'll get liquidated. So we could just continue dropping, but this is the full move of wave 3. Or maybe the full move of the whole 5 waves. Based upon this projection, I've laid out a fib, and you can see how it's respecting the fib zones. So if I was to trade this, I shorted around here, but if I was to be trading this right now, I would be waiting because this is an extended C. If it is a ABC correction, which it's not, because A wave here should be B wave there. C wave should be the same length of A, which is not, which means it's actually probably going to be a 5-3-5. So 1, 2, 3 down to this BPR, 4 probably back up to probably here at this BPR right here, or really it could capture just this sliver right here. So we could see it bounce up to here, or we could also see it just go 1, 2, 3, dead cat bounce up to here, and then this 4 and then 5 could come back down to here, and then maybe sweep underneath the parallel channel right here, just like it did over here. Up, retested nearly this pocket, comes back down, sweeps below for a 1, 2, 3, 4, 5. It always moves in these patterns. 1, 2, 3, 4, 5. And 1, 2, 3, 4, 5. You see it? Let's go to another one so you can see it. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And then in these waves, there's larger waves. So 1, 2, 3, 4, 5. What do I expect? I expect this to potentially be a larger wave that sweeps underneath. This is A, B, probably up to here. So I could see an A, B, C correction down to there. And then it could tap at this point. But if I was trading this, my next move would be wait for a level to be tapped. What do I mean by that? Look how it's respecting the 0.382. The golden pocket held support, came above, wicked above the 0.786. Measured move, we're at a wait, one could say it's a 1, 2, 3, 4, 5. But overall, I expect wave A to be here. And not to get too in the weeds unless this is an ABC correction up. But, yep. I have my parallel channel, which is I'm going to be trading within these confines. BPRs, I would be looking to long if price hits the bottom of the channel. If price sweeps this low, touches this BPR with confluence at the bottom channel, I would be looking to long back up into here. If price gets back up into here before it touches the projection or the bottom of the parallel channel or the BPR, then I would be looking to short here. That's how it works.